Hi everyone, I'm Anya Parampil and you're watching Redlines. On Monday, the Federal Reserve announced an emergency stimulus plan designed to pump money into the country's ailing economy, which has taken a downturn as a result of the coronavirus outbreak. The Fed will, for the first time in its history, participate in the corporate bond market by lending to investors who wish to purchase low-risk securities. It will also step in to buy consumer debt, purchasing securities such as automobile or credit card loans for the first time since the 2008 financial crisis. The move follows a decision by the Federal Reserve to cut interest rates to zero on March 15th. However, the aggressive plan was not enough to quell investor anxiety, with stocks continuing their downward spiral despite the news from Washington. To get an idea of how people on Wall Street are viewing the coronavirus pandemic, I spoke earlier with Hans Humes, the president and chief investing officer at Greylock Capital Management, one of the world's leading distressed debt funds. Hans Humes, President and Chief Investment Officer at Greylock Capital. Thank you for making time to speak with me this afternoon. On Monday, the Federal Reserve announced sweeping measures designed to instill confidence amidst this economic uncertainty surrounding the coronavirus outbreak. Yet, stocks and the market still took a tumble. Help explain for viewers why that is.
Listen, I think Powell's doing an amazing job given the background of criticism he's gotten from Trump. And I think the measures he's trying to put in place are, at this point, he's sort of trailing. He's playing catch up to really trying to provide, put stopgaps in on the problems that we're seeing maybe at the end of last week. So I think the way people are looking at this, you got to give the guy a lot of credit, but it also, the magnitude of the economic impact of this is such that there still isn't confidence. I think that the background noise with Congress, the fact that he had to jump in front of Congress to announce what he did, also didn't help. But I think part of it's also psychological. Your QE, it's going to take a little while for this to work through. The markets don't really know how to function in these environments because all of our disaster recovery wasn't built around being in isolation. So knowing how to trade in these markets, fine. Stocks you can do those electronically in many ways. I think most of the exchanges can function. But in the bond markets, we're all used to being on desks and we're trying to figure out how to take care of kids at the same time as we do our day job. So, you have that issue that things feel off kilter when the major financial center in the United States, New York, I think the feeling on the streets is eerie. There's a sense of sort of foreboding. So expecting a market bounce that actually implies that we found a bottom is really premature. So give credit to Powell. We may have to see much more. And frankly, I don't think we're going to see a bottom in markets until we see sort of a plateau in terms of reported cases and fatalities. And that's the biggest driver on the economy. We don't know how we're going to really estimate the economic impact of this crisis until we know where the crisis is going. We need a visible end. So everybody can project what's gone on in Wuhan forward in the United States, or we can look at Italy. But to really ascertain how much intervention is going to be needed in the economy, I think we're weeks away from that. So again, kudos to Powell, but I don't think it's really a surprise that the markets weren't able to sustain much of a bounce after he stepped in.
Wuhan and Italy both took much more extreme measures in terms of restriction on individuals and citizens, really, in order to curb the spread of the virus. When you compare it to the United States, it's concerning because it seems like it's hard for us to base our projections on those countries when they took safer measures. In simple terms, what is the difference between the bond market and the stock market, and how does that factor into how they each respond to news of the coronavirus outbreak?
Interesting question. Stocks in the U.S. I mean, U.S. Treasury market has as much liquidity as you need for the most part. Although I guess we had a couple of days last week where it felt like it was a bit trade by appointment. U.S. equities generally have relatively good liquidity, and I think there's a good, they have a good established way of trading electronically. When you start getting the corporate bond market, the high yield bond market, the emerging market bond market that we're in, generally it's sort of over the counter. There isn't the same kind of liquidity in the best of times, and in these markets there's virtually no liquidity. Even the investment grade names in the United States, it's been very, very choppy. Investment grade names in emerging markets have been, not that liquid. So I think it's just a matter of liquidity. I mean, you see that, emerging market equities versus U.S. equities. It's one thing where things fall and you hit the circuit breakers, but after the circuit breakers clear, there still is trading. A lot of the bond markets, when you get beyond the U.S. Govy market, it just liquidity disappears. And then, I guess the real issue that faces both of the markets is their number of institutions that provide daily liquidity to their investors. And with this, when you start finding all the confidence disappearing in the markets, retail investors start pulling money out. It's one thing if you're a mutual fund and you've got a very broad platform and a good capital base. But when you start talking about UCITS funds in Europe that are based on emerging market bonds or ETFs, technically there's going to be a huge amount of pressure. I think the U.S. equity, daily liquidity funds. I think there's enough liquidity in the U.S. stock market to make it through. But certainly in EM equity, any daily liquidity platform or EM bonds, there's going to be a lot of pain. So the technical clearing, the longer this goes on, the more systemically selling will be. And we've already seen that. We've seen, 50, 60 point moves on bonds, and there's just not enough of a bid side to absorb the supply that's being forced to come out. I guess it's a very long answer to a pretty short question, but I do think, touching upon the structure of the investor universe and the type of instruments they invest in is going to have a lot of bearing as this crisis unfolds.
And we talk about emerging market bonds compared with U.S. bonds, just so people are clear, you're talking about countries which are more developing, correct? Not right. European or Western countries. You're looking at more of the Latin American, Africa, these types of countries issuing bonds to the market. This is the first time since 2008 that the Federal Reserve has moved to act as such an aggressive, essentially almost like a private investor, saying it will purchase assets and mortgage-backed securities on the market the way someone like you would right now. Why is this move by the Fed so significant?
Well, this is a very different crisis than we saw in 2008, because it's one thing to destabilize the financial markets, and in that, in 2008, you had the financial markets delevering in a way that started endangering the real economy. Right now, what you're looking at is the real economy potentially taking hits in a way that we've never experienced before. So, in order to step in, I think the quantitative easing, that's sort of code word for, the Fed
Printing
stepping
money?
in by. What's that?
Printing money?
Well, printing money to buy any asset they can. I would expect that they're going to, the quantitative easing that we're going to need in this round will exceed anything that we saw in the financial crisis. The hit to the real economy. This is financial markets moving in response to an outbreak of, of a virus that's causing a pandemic, and we don't have the infrastructure to run the data so that we can accurately predict the trajectory of the crisis. So we have no idea how to quantify the damage to sort of core industries in this country. Back in 2008, they were looking to backstop the banks. Now we're looking at, we have no idea where the damage is going to go. And frankly, I think that the Fed is going to have to look beyond anything that it's done in the past and look to precedents in other countries, direct interventions in the equity market. They may have to step in to backstop exchange traded funds. We don't know. But in terms of expanding the balance sheet, from what I see, you ain't seen nothing yet. Because what they're going to have to do based on how fast, it took 15 days, and this was as of last week, 15 days to get the same damage to the equity markets. It took 108 in 2008.
Right.
So the acceleration of the sell-off is going to create, we don't even know what the ripple effect is. And part of it is we don't even know how to manage parts of the economy if everybody's in isolation.
Right. Right. I was speaking with a friend earlier today who made the point this is really unlike any other crisis because if the economy is frozen simply because people aren't moving, aren't going out and buying things and can't, they're under orders not to, essentially. That's something that no amount of economic stimulus or monetary package can fix.
That's absolutely true, in which case you're going to have to actually prop up markets so that I don't know what the answer is. You hear these stories that gas stations selling gasoline for less than $1 a gallon in Kentucky because nobody's buying it. But there is going to be, so you get the rush of demand while everybody stockpiles.
Right.
And then a collapse of demand of everything. I'm waiting here in Vermont. I did a couple emergency runs up last week to make sure that my employees, friends, family, everybody had enough supplies to make it through, the next 3, 4, 5 weeks. The shelves were bare. Paper. Having grown up in Africa and Latin America, I don't really understand this obsession with toilet paper. If you're going to be isolated for a long time. Food, stuff to drink, maybe some cleaning supplies, but toilet paper. Anyway.
If you've got running water, you should be okay.
Well, we don't have to go into too much detail about. I would agree with you. And again, in Nigeria, my father moved us there, and the Biafran War broke out, and we had no water or electricity for stretches of time. There were big food shortages. That's what you're supposed to worry about. Making sure Anyway, so I did a couple of runs. The shelves were full here through Friday of last week. Wait a second. Friday of the week before last. Sorry, it's Monday. I'm losing track of time.
We all are in quarantine.
By the weekend, the paper products aisles are completely bare. Most of the cleaning products are bare. Although it's kind of weird because you'd be able to find bleach, hydrogen dioxide, but Purell was completely gone. It's like, guys, go to the liquor store and buy the highest proof liquor you can get, and that works just fine. And the advantage is you can clean your hands, and if you're miserable, you can get drunk too.
Yeah.
Can't do that with Purell. Anyway, so let's see what happens. You get the surge of demand. Everybody's stockpiled. We're all going to, I would say that sales in grocery stores and everything, pharmacies, that's all happening now. Let's start waiting. We're all hunkered down. We've got enough supplies for the next couple of months. Then all of a sudden those shelves are going to be full and people won't need to buy anything. So then nobody's buying gas because nobody's driving around visiting family. Nobody's flying. I mean, this is in complete uncharted territory. And I don't think that, I think there's eventually a light at the end of the tunnel because of this huge race to find some sort of treatment, and all the pharmaceutical companies going 24/7 to put anything to work that they can. But until we see that, we're just going to see real destruction in the economy. And it's interesting because the logistics, the supply lines, it's as we were talking about before. I'm trying to help a few people who are attempting to get supplies into sort of the epicenter, which is New York City, New York State, but also different areas in the Northeast. And there's really the federal government system is not functioning de facto. The state systems are playing catch up. And from what I'm seeing, I think that this might be private sector to private sector. So the private the private hospital probably have to start sourcing their supplies directly. It's been really interesting over the last 4 or 5 days, trying to help people who have stockpiles of stuff or identified where there are stockpiles that aren't in places that they're not needed, and figuring out a way to get them to where they are needed, which is New York City, New York State, the different centers. It's interesting watching again the speed with which this is developed. The bureaucracy hasn't caught up. I give a lot of shout outs to Cuomo. He's sending some of the right messages, but we're going to have to make sure people have to understand that some of this stuff is I mean, there's all these accusations of price gouging, but the reality is, if you need things quickly, you're going to have to be sending stuff from, let's say, a gown manufacturing shop in Indonesia, put it on an airplane that's going to be chartered, bulk supplies. I mean, certain things are going to be expensive. I mean, I guess Cuomo mentioned that, their masks, the N95 masks were $7 a piece for the 2 million that he bought. I think that fair price, I mean, regularly they're about $1. I think you could probably source them at maybe $3. But there's a lot of competition for supplies that are out there. The supplies are there. They're just not in a place where they can get to where it's needed efficiently. So and we'll have to see how that develops too.
People are even discussing the Defense Production Act. Reporters asking the president whether or not he would consider repurposing some factories to produce things such as face masks or ventilators. And we saw China take similar action or take that direct action. Do you think that's necessary at this point?
I think it's happening regardless. I mean, that would have been a good move if he'd started with that. But I mean, Trump is at best a lagging indicator in this situation. My sense is, and what I've seen on the private sector side, is that it's happening already. I mean, you're seeing the announcements by Ford, by Tesla, and by the time he gets around declaring it, I think it's may have in large part already happened. We've heard stories about sort of the private sector setting up escrow accounts to be able to prove purchasing ability to bring essential supplies into the hospitals. So the business leaders in some communities, I've heard, are stepping up to make sure that there's enough backstop in the health system because they understand that their businesses need this to survive. So, it's an interesting thing. I mean, I think if we'd had a proper set up healthcare system, we would have managed it better. Frankly, I mean, boy, if we ever needed a proof that we needed some sort of, healthcare system accessible by all, this would be the time.
And centralized, not split up between so many individual corporations.
Yeah, no, that's fair. I mean, it's interesting. I mean, we'll see how the different systems manage this, but I do get the sense that the private sector is actually moving much more quickly than Trump, and part of that is just because everything I hear is the federal government. I mean, the income, the people who are calling into the federal team that's responsible for this can't get responses. And there's just this dysfunction at the federal level, better function on the state level. The local level seems to be working. And then the private enterprises are just like, okay, we need this stuff, we're going to buy it. And it seems like the business leaders are starting to be socially responsible enough to fill the gap. So the irony is, it would have been far better if we'd actually been prepared on a government level for this and defunding the CDC and all the programs and taking out the one CDC person that was on the ground in China at absolutely the wrong time, putting pressure on Obamacare. These are all things that made our ability to react to this, much worse. On the other hand, turning around and recognizing, I mean, QE spending is great. Giving money directly to people, well, let's see what they need to spend it on. I mean, there's got to be economic activity. At a certain point, everybody spent what they needed for the next 2 months. Big hearing that Trump is, contemplating the 15 days suggested sort of self-quarantine if cases are still rising, strikes me as being not that smart. So if business leaders have to step in and provide the infrastructure so that the supplies can get brought into the communities, there are one or two examples that I'm hearing that are going on that might have to be the system that, wealthy New Yorkers going in and saying, you know what, let's make sure that our hospitals can be set up. We can wait for the National Guard, but if the hospitals need ventilators, they need masks, I think this is time for people to do their civic duty. I've certainly been spending a lot of time over the weekend trying to work on this stuff.
It's a grim picture, as you say. This whole experience seems to have exposed the fact that we don't have a functioning centralized federal government. And that is what made a response in China effective. The fact that they could not only have a health response, but also restrict people's movement and place entire cities under quarantine. At least it seems to have worked in their case, but we're driving without any direction here. In an interview with CBC,
I would say though, if you look at the population density of China as a nation compared to ours, northern Italy also. I mean, you have New York City. It's important to minimize interaction. I think anywhere the 6 feet, rule makes a lot of sense. And I can tell you here where I am in Vermont, I go to the post office, I go to the stores, and everybody's, after a lag of about a week or so, everybody's practicing proper social distancing. We don't have the same risk of contagion in many parts of the country that there is in northern Italy, especially around Milan, or in China, where you've got incredible population density. So, I don't think we necessarily need to have the same kind of measures that they put in place, but that's my opinion.
In an interview with CNBC today, the former governor of the Bank of England, Mervyn King, said the financial crisis in 2008, which he actually served during, was easier to handle because, quote, we knew what we were dealing with. This goes back to what you were saying earlier. He says governments now need to step in and act as, quote, the last resort buyer and reassure corporations and households that they won't run out of cash during this crisis. Do you agree with that assessment? And how do the actions of the Federal Reserve compare to steps taken in Europe, for example, by central banks there?
This past March was, in percentage terms, the biggest sell-off that we've seen in the equity market, biggest percentage sell-off since 1931, which was basically the depths of the Great Depression. So, if you think about FDR, the New Deal, everything, well, we're going to have to do that on fast forward because of how quickly this is moving. So I would agree that this is something that's been uncharted, and we're definitely going to have to be timing the reaction to the economy, or we're going to have to manage the reaction to the economy based on the, how exponential the growth in coronavirus cases and the fatality rate. So you can't quantify the economic damage unless you know what the pressure on the healthcare system is, how much collapse in demand there's going to be. If you think about it, in 1931, the unemployment rate was what, between 15 and 20%. We're not close to those numbers yet, but we might get there pretty soon, given what's happened. It's just happening much, much more quickly. Therefore, the federal government, in effect, stepping in and backstopping every household, every industry that it is. I mean, you need the bedrock of our economy is the consumer. People need to spend money for the economy to function. Industries, in particular, may not, you may not need them, there's going to be you just imagine how bad it's going to be for small and medium-sized enterprises. But I would definitely agree that this is nothing we've seen before, so we can't quantify it. We can't analyze it. We can use bits and pieces. We can take a look at the Spanish influenza back in 1918 in terms of potential recovery in markets, which took a while. But in terms of basically, the U.S. has the advantage that we still have the sort of, the dollar is sort of the international currency. So we might be able to go in there and, the helicopter drops of money works when you can spend the money. But when we see the end of the crisis, when we start seeing a plateau forming, that's when we are really going to have to make a measure of how much is needed and where it's needed. But it is going to be, it's going to be a great new deal, and it's going to have to be done very quickly. I'm curious to see how Rand Paul reacts to that reality.
He will have to recover from coronavirus himself first, apparently, getting news reports this week that he has tested positive for the virus. When we think about employment numbers, it's shocking. I realized looking back that during the crisis between 2008 and 2009, on a monthly basis, the economy was never shedding on average between 700 and 800,000 jobs a month. But now we're looking at a situation where, at some estimates suggest, we could see a 5 million strong job loss in just the next month. So it's pretty shocking. I don't think anybody is really aware of how dire that is.
If you think about it, the places hiring, Domino's Pizza, Amazon, nobody. I would guess that biostatisticians are probably demanding in terms of sort of white collar work, educated workforce. Anybody with medical training. I can't imagine biostats people are in tremendous supply because they're the only ones who are going to be able to give us a picture of what we're facing. You're going to have to get the data collection. You got to get the tests out. You've got to do the follow-up studies, and you have to model them so that we know when this is going to plateau. At that point, we'll see. I don't think I actually think that 5 million job loss number is in it's highly likely it's conservative. I see it.
Conservative.
Yeah, I see. Listen, people, far more people than that are furloughed, in isolation, don't really have anything to do. There are not that many of us who can run our jobs remotely. And then you've got the essential personnel. But if this runs, not 2 months, but 3, 4 months, unless the federal government steps in a way where, everybody's sort of de facto employed because their business has got a line of credit that they can pay people. Yeah, I mean, this will get much worse before it gets better. And again, I mean, obviously, if all of a sudden some pharmaceutical company comes up with some cure, which would still take a while to get through the system, given how the system's sort of seizing up. Maybe it won't get that bad. But I'm really pessimistic on the job losses.
As the president of a major hedge fund, you pay very close attention to international news, not only financial news, but affairs between countries and deal with the debt of sovereign nations. The U.S. announced fresh sanctions against Iran in the midst of this outbreak, which has rocked Iran particularly hard, with officials there emphasizing the dire impact U.S. unilateral coercive measures have had on the country's health system. Meanwhile, Venezuela, a country where U.S. sanctions are estimated to have caused tens of thousands of excess deaths, now also has confirmed cases of the virus. Does all of Wall Street favor these sanctions, and what is your opinion?
Uh, I I highly, highly, highly doubt that there's even a majority of Wall Street supporting these sanctions. It seems unconscionable to be using those types of measures in this type of a situation. You're basically, this administration and the speed with which they've acted, arguably will end up costing American lives. The system as it works within the U.S. And now, listen, I do think Trump can play some catch up, and he is more likely to be flexible in this as he gets nudged. So, my hope is that he continues being flexible, allowing as much economic stimulus as needed come into the system. But the hardliners in his administration who are pushing on these sanctions, it's incomprehensible. I mean, the Maduro went to the IMF and asked for emergency credit to save people, and the IMF came back and said, well, not all our members think you're the president. As far as I'm concerned, that means Juan Guaido should say, you know what, can we please have, this emergency line of credit so people don't die? And we haven't seen that. Iran, fine, okay, there are a bunch of hardliners who run a parallel government there, and I don't think anybody would argue that those guys are, friends of America. Then again, we didn't exactly, stick with what we said we were going to do. It just befuddles me. I know that the sanctions that came on Venezuela were kind of, lackluster, but they're, and I don't think this is Donald Trump, honestly. I don't think he's the kind of guy. We know that he, back in September 2018, he's, after making a hard speech against the Iranians, we've heard rumors that he was happy to talk to Rouhani. He publicly went out and said that he would talk to Nicolas Maduro. Maduro came up to New York. So he, as a person, Donald Trump as a person, I don't think is the one behind pushing on these sanctions. Um, and it's unconscionable that you would do something like this. Like, listen, this we're in real trouble. Possibly, this could be if this goes in a worse way. I mean, why would you want to collapse an economy and have massive refugee issue of everybody running across the borders and spreading the virus? Iran, you'd want to do whatever you could to keep the Iranians in Iran. I mean, we know that Lebanon's had issues with Iranians coming out and going into Lebanon. But if you isolate, if you create such pressures that people get scared and run across, the borders won't hold. So same thing. If Venezuela, I don't think has had a major outbreak, but there's a lot of fear. They're trying to impose some sorts of restrictions on movement. We know there's a shortage of gasoline, but if things start getting really bad there, those people are going to start leaving the country. The economy is starting to stabilize despite our sanctions. And again, I think that the sanctions that were imposed on Venezuela were pretty cosmetic. But
which round of sanctions are you referring to?
The last ones from, I don't know, a week or two ago, which I don't think.
But the previous sanctions that the U.S. has imposed do have a very significant impact on the health system.
No question. No question. And I would think that one, in the interest of the health of the world, this is a time to step back from sanctions. My general view is that sanctions are a policy that the U.S. has misused, and it's like anything else. It's like using antibiotics. The more you use them, the less effective they become. And at this point, long term, they're not going to be effective, and short term, they're the last thing you should be doing. This is a time for people to come together. Like, you know what? Make sure that people in Iran and Venezuela don't die. Then, when we see the end of this, then we can figure out the politics of the situation. But clamping down, one, you're killing people on the ground. Two, you are potentially exacerbating the global crisis because people, if they're starving, are going to want to run away. And especially in a situation like Iran, that's been struggling with a pretty bad, rate of fatalities with coronavirus, you don't want these people spreading all around the neighboring countries. So
yeah. Viewers might be surprised listening to you say that a majority even of Wall Street might be opposed to these financial measures. Help them understand why you believe that.
Listen, first of all, Wall Street, in terms of people who work in finance, every reaction I've seen, all the communications I've seen between people, is people checking in with each other. I do not think this is the time where the sharks are out. I'm not sure that politically imposing sanctions on Iran and Venezuela are more associated with with people who are involved in those situations. So you might have Venezuelans who work in finance, and because they're wealthier, are anti-Maduro. The Iranian population, the expat population. But in general, I don't think that sanctions as a policy are really that well regarded in the professional financial world. I mean, all it does, we've seen the complications it causes. So if you get,
I guess you guys want to do business, to put it simply.
Absolutely. I mean, I think that a lot of people were getting incredibly excited about, Iran opening up in 2015, and here we are, dealing with the aftermath of pulling out of the, JCPOA. So, I think that's probably a miscomprehension. The thing about it is, I don't think Donald Trump really believes in these sanctions. I think it's a tool that he saw as being useful. I think he was sold on the idea that sanctions would work to force regime change in both Iran and in Venezuela. Um, but it hasn't occurred in either place. So this is not the time to see if you can. You're not going to collapse a government in the middle of this crisis. People, think about it. To collapse the government, you need people to come out in the street and have huge demonstrations against the existing government. You think in the middle of this crisis, you're going to have 1 million people packed in to get, with each other, walking to the centers of power? No, they're going to stay away from each other. So I'm not sure what the sanctions are supposed to do anyway. This is not when you're going to collapse the government.
And probably not when you should, if it's supposed to be delivering health assistance to people around the country. Finally, Hans, going forward, how do you see this crisis having a long-lasting, if not permanent, impact on our global economy? We've seen some weaknesses revealed in the way, for example, we relied so much on China to produce goods, especially medical supplies we need here in the United States. People talking about maybe we should start producing these things at home once again. You mentioned for now that the dollar is still the world's reserve currency. Do you see that being impacted by this outbreak at all? Where do you see things going in the future?
Wow. I could brainstorm for hours and hours and hours. But the way I've approached business usually is, instead of predicting what will happen, it's just that something will happen. I think there's no question that the world economy is going to be permanently altered by what's happened. How it's changed, I mean, everything you bring up is a possibility, but I think it's premature to make predictions given where we are. I think there are going to be some profound changes in the U.S. I would expect that people's opinions about healthcare and availability of healthcare is going to change. In terms of productive capacity, outsourcing, yeah, you might be right, but I'm not sure about that. It's sort of too early to tell. So I'd rather just say, yes, we know that things will change. I'm not sure how they will.
All right. Well, we'll stay in touch, especially as we're all stuck at home over the coming weeks and months and forced to just stand by and watch as it all develops. Hans Humes, President and Chief Investment Officer at Greylock Capital, thank you for your insights today.
Yeah, take care, Anya. Enjoy.